Very good morning, everyone. Hope you all must be doing great. Let's start with the day 5 for deductions. And guys, you have to excuse me today. My throat is not that well today. Okay, let's start with the deductions. First, we should know the difference between optional regime and default regime as far as deduction chapter is concerned. And in fact, there is a major difference. Why? Because deduction chapter is mainly for optional regime. We get a very less deductions in good morning, Aditya. So we get a very less deductions in default regime. It is mainly for the optional regime. So let us first look at it. It is like this. Under optional regime and default regime. Or I can also say like today, in default regime, we have deductions only, which is only 80 CCD2, only 80 CCD2. What is 80 CCD2? I'll explain, don't worry. Second is 80 CCH2 and 80 double J double A. These are the only three deductions under default regime. 80 CCD2 and in fact 80 CCH2, they both are employer contribution. They both are related to employer contribution. I will be explaining both of these sections today. These both are employer contribution. The first one is related to pension scheme, and the second one is related to Agniveer Corpus Fund, or we can say Agniveer Fund. 80 double J double A is a separate section. It is for new workmen, or we can say also for additional employees. So these are the only three deductions which are available under default regime. See, these are also available under optional, but in default, only these three are available. Whereas under optional regime, all deductions, all deductions from 80C to 80U are available, including these, including this. These are also covered over here. So these are available in both. These three are available in both, but other deductions are not available over here. Then there is one more deduction, although it is not of chapter 6A, but 10AA, SEZ. Although I think that we will not be able to cover 10AA today, but with total income, we'll definitely cover 10AA. So 10AA is also available under optional regime, and 10AA is not available over here. It is not available over here in default regime. Have you written it, guys? Have you all written this? Correct. Then please also note, important note, deductions under 6A, chapter 6A, that is 80C to 80U, is available only from normal income. 80C to 80U, all the deductions, whether it is optional, whether it is default, 80C and to 80U, this chapter is only available only from normal income. What does it mean? It means that is not allowed from special income. Special income, we cannot take this deduction. Keep on writing with me. So we should know that 80C to 80U is only and only from our normal income. It is not from our special income. I'll give you an example. Let's say assessee has PGVP income of, for example, 1 lakh. He has long-term capital gain of rupees 10 lakh. He has IFOS rupees 4 lakh. And this all 4 lakh is coming from casual income, lottery, game show, etc. So total income GTI he has GTI of 15 lakh. So he has GTI of 15 lakh. Now, let's say you want to take chapter 6A deduction. For example, he would like to take 80C. Let's say, for example, in 80C, he has paid tuition fees for one of his child. Tuition fees. And for example, he has paid 1,50,000 rupees. So we understand in 80C, we know it that maximum 1,50,000 is the deduction available. Now, can I subtract from GTI? It is 15 lakh. Now, can I subtract 1.5 lakh from here? The answer is it's these deduction under chapter 6A are available only and only from our normal income. So what we have to do it in our rough, what is the rough page? Rough page is the last page of your answer sheet. It's the last page of your answer sheet. Just in your rough, right now I'm doing it right now here itself. So in your rough, just whenever you are giving deduction under chapter 6A, it will take just 10 seconds or 15 seconds of yours. You should make sure that how much is my other normal income, because your chapter 6A cannot be more than that income. So in your rough page, that is the last page of your answer sheet, which at the time when you will submitting at 5 o'clock to the examiner, to the invigilator, at that time you will cut that page, right? So that is called a rough page. It is not a working note, it's a rough page. So in a rough page, simply right now you can do it right here, just leave 1 or 2 line over here. And your GTI was 15 lakh. Just try to know that how much is my 111A. 111A is again a special income, short-term capital gain. How much is my 112 other long-term? How much is my 112A long-term on equity shares? How much is my casual income? And then your remaining normal income. Then your remaining normal income. And guys, chapter 6 deduction can only be available from this remaining income. It cannot be more than this remaining income. So if in this question we will find that out of 15 lakh, do we have 111A short-term capital gain on equity shares? No, we don't have short-term capital gain. Do we have 112? 112 is all other long-term except equity shares. So 112A we don't have, but long-term gain we have 10 lakh. This is 10 lakh. Casual income we have 4 lakh. So tell me out of 15 lakh, how much is your special income? And then the balancing figure. Just do the balancing figure. So 15 lakh minus all this. So 10 and 4, 14. This you will get with 1 lakh rupees. You will get 1 lakh rupees remaining income. So you can take your chapter 6A. Your chapter 6A is available only from your remaining income. This amount. It cannot be more than. Correct. Deepa, Kishore, Pradeepa. Correct. So this remaining income is 1 lakh. So maximum deduction under chapter 6, all from 80C to 80U. I cannot go more than 1 lakh here in this case. So although 80C 150 is the internal limit, but I cannot go more than 1 lakh over here. And my total income would be 14 lakh. This is my total income. Everybody understood this or not? So please remember, chapter 6A is only and only from our remaining income. You must be knowing about it also. In case you are not knowing about it, you should know this, that chapter 6A is available only from our normal income. It is not available from our special income. Correct? I believe you must be knowing about it. Okay. So I have to discuss many of the sections today, but I'll be discussing with the questions. So let's start with the question number 1. It says, Mr. John, so I have covered many of the sections so that I can discuss most of the sections in these questions. John has a salary income consisting of basic salary 50,000 per month. So he is earning basic salary 50,000 per month. Guys, again, what we should do, instead of reading the question first, we should actually first come to that point that what is demanded from us, what the examiner is actually asking. So let us see here. Compute his tax liability for the assessment year 25-26 if he does not opt for the default tax regime as per 115 BAC. So he's opting for the optional regime. He does not opt for the default, so he's opting for the optional regime. And today, mostly I will take only optional regime, because in default regime, very few, 3 sections are only available. Under optional only, these sections are available. So mostly today it would be optional scheme. Correct, Kishore, optional regime. Okay, so now we understood that we have to compute the tax liability. And to compute the tax liability, we should know the total income also. Correct? Now, John has a salary income of this, basic salary this, DA 20% of the basic salary, out of which 60% forming part of retirement benefits. Okay. See, retirement benefits, right now you don't have to do anything. Only whatever the basic salary we are getting is taxable. DA, whatever we are getting, is taxable. What forms part of retirement benefit is not that important right now. But yes, while computing any salary definition, there we take forming part. As of now, this particular 60% is not that relevant for me. Whatever is my DA, that is fully taxable, right? Only for the purpose of some definition, we take forming part. Otherwise, forming part is not that required. He also has a small retail trading business and his PGBP income is 7 lakh. Okay. So this person has salary income. This person has PGBP income also. Okay. He paid 35,000 life insurance premium on the insurance policy. Okay. Deposited 98,000 in Sukanya Samriddhi. Okay. Everybody should know about life insurance policy because this is quite important. Write with me. This is a deduction under 80C. Please write 80C. Only optional regime, obviously. It is not available in default. It is only under optional regime. And the maximum deduction in 80C, we all know maximum deduction is 1,50,000. 1.5 lakh we can go in 80C. And one of the important point over here is LIC premium. When you pay your life insurance premium. Because I'm not talking about health insurance. Health insurance is in 80D. Here it is life insurance. So life insurance premium. Here life insurance, you can pay it for the assessee himself or herself, or he can pay for the spouse, or he can pay for the children. The children can be dependent or non-dependent, doesn't matter. Please keep on writing with me. The children can be dependent, non-dependent, does not matter in ATC. And parents are not covered over here. Not parents. Even if they are dependent, then also parents are not covered in ATC. Parents are covered in 80D. Health insurance, they are covered, but not. And two things, please remember: children, whether dependent, non dependent, they both are covered in ATC. Parents are not covered in ATC. Now, we understand in ATC, the maximum deduction is 1.5 lakh. But there is some internal limit also with respect to life insurance premium. There is some internal limit also. And what is this internal limit? It depends upon the policy, the date of policy. That this policy is how many years old when we have started this policy. So actually, this depends on the policy date, that how much premium we can take. What is policy date? Policy date means the date on which we have started this policy. Gumti, you are struggling with the internet? Okay. Policy date means that when we have started this policy, when we have taken this policy for the first time. And how much is the maximum premium? So first is, if we have taken this policy, please remember this date. If we have taken this policy anywhere between before 1/4/2012, guys, this date is very important. Just remember this date in case of LIC, life insurance premium. This date is very important, April 2012, 1st April 2012. So if we have taken any policy which is before 1/4/2012, the maximum premium which is allowed is 20% of sum assured. What is sum assured? I believe you must be knowing it. Let's say we have taken a policy, a life insurance policy of rupees 20 lakh. That if something will happen to the insured person, that 20 lakh will be received by the family member. That is called sum assured. So for which we are paying some premium. This is not premium. This is the sum assured. It's the life cover. That if something will happen, then this much money the family members will receive. So if the policy is taken before this date, so if the policy is up till 31st before this date, not this date, before this date, that is up till 31st of March 2012, it is 20% of the sum assured. After this date, they changed it. They changed it from 1/4/2012. They changed it. And for next 1 year, they have made a little mistake. But for next 1 year, now please don't remember all the dates. Please remember my these words for next 1 year. So for next 1 year, 1 year will automatically will end on this date, right? So you don't have to remember this date. You just have to remember this date. Before this date, 20%. After this date, for the next 1 year, it was 10% of sum assured. But but the thing is that they have made a little mistake over here when they made it 10% for all types of policy. They found that the people who are physically handicapped, blind, deaf, or dumb, for them, the insurance companies charge more premium. So they understood that the people who are physically handicapped, blind, deaf, dumb, etc. So for those people, insurance companies charge higher premium. So after 1 year, they rectified this mistake. So 1 year, after 1 year is on or after 1st April 2030. Now they made it for normal policy, they made it 10% of sum assured only. But for the person who is insured, who is physically handicapped, blind, deaf, or dumb, then it would be 15% of sum assured. So you have to take care of it. That what is the date of the policy? Guys, if the question is silent, they are not giving you any date. So please presume that it's not that old policy. See, before 2012, if you look at it today, 2025, almost 13 years, it's a very old policy. So if the question is silent, they are not giving you dates of the policy, then please take that it is a recent policy. Recent means not more than 2, 3, 4, 5 years, right? So it would be 10% of the sum assured. So please If the question is silent, please take 10% always. But if it is given in the question that this person is physically handicapped, blind, deaf, or dumb, in that case, please take 15%. Generally 10%. In special cases, take 15%. But in case the policy date is given, and if the policy date is before this date, then please take 20%. Up till this amount only we can allow. Have you all done this or not? Good. So I'll explain this with an example. In fact, with the question itself, we'll get to know about it. So I'm again saying, please remember this date, and because of and from this date, you can build up your entire particular this thing, right? Now, coming back to the point, he paid 35,000 premium on life insurance policy. Okay, 35,000 premium is paid. Sum assured is 2 lakh. As of now, I have not read the entire question. Sum assured is 2 lakh. Tell me if nothing is mentioned about the date. Everybody tell me how much you will allow. In 80C, how much you will take. Let's say if nothing is mentioned regarding this life insurance premium in the subsequent points, then you will take 10% only, correct? So 10%, Aditya correct, Shagna correct. So it would be 10% of 2 lakh would be 20,000. So if you are paying up till 20,000, then it's okay. So in this case, 80C will be allowed, correct, Gomti? 80C will be allowed 10%, that is 20,000 only. So if nothing is mentioned, please give 20,000 only. Had it been less than 20,000, let's say if this would have been 19,000, 18,000, then I would have taken 19, 18, whatever it is. But if it is more than 10%, that is 20,000, then we will not take, which is excess. Only up till that amount we will take. So 20,000 we will take if the question is silent. If the question is not giving any date, the assessee is normal, the assessee is not physically handicapped, blind, deaf, or dumb. So we will take 10%. Okay, let's read it further. He deposited 98,000 in Sukanya Samriddhi scheme. Sukanya Samriddhi, again, it is part of ATC. Sukanya Samriddhi is ATC. And 24,000 in LIC pension fund. LIC pension fund. See, you can write it here also. This is not pension scheme. This is not pension scheme. Pension fund. A new pension scheme. Please write it here. Guys, if it is pension fund, if it is pension fund of a mutual fund company, any mutual fund company has, you are depositing in any mutual fund company pension fund. So what is actually a pension fund is, let's say any person who thinks that I need more money at the time when I'll be retired at my retirement age, I need money. So there are different types of schemes today in the market. There are different types of schemes today in the market. So you can invest in those schemes till the time the assessee is 60 years of age or 65 years of age, as per his choice. He can deposit, and at after a particular point of time, he would be receiving that money back from the mutual fund or from any other uh, scheme where he has deposited the amount. So today there are so many schemes which are available in market. So some pension fund, some mutual fund companies also offered such type of pension fund. So if it is a pension fund of a mutual fund, then it is, this deduction is available under 80C. Correct? If it is a pension fund, although this point is not that important, but still you should not be confused regarding it. If it is a pension fund of a any insurance company, if it's a pension fund of insurance companies, so there are so many insurance companies also who give such type of facility to us, insurance company, then it is allowed under 80 triple C. 80CCC is a very, very small section only related to pension fund of insurance policies, insurance companies. And guys, if the question is telling you about, specifically they are telling you about, they're using the word new pension scheme, or they are using the word employer pension scheme, any pension scheme which is floated by the employer, some employees getting it, employer pension scheme. Very rare chance they can tell you about Atal Pension Yojana. So all these pension schemes, new pension scheme, NPS, employer, you understand that in this case the employer is contributing to the pension scheme. Atal Pension Yojana, very rare you will get. So this is actually 80 CCD. This is 80 CCD. So please write this also, so that you should not be confused. So pension fund, these two are normal pension funds. These are simply available in the market, and any assessee, whether he is having a business or any other assessee, if they wish, they can take this pension fund for their future benefits. And this is specifically for new pension scheme. So mainly there are employees who will contribute over here, employer will contribute over here. But now this pension scheme is also available to general public also. They are non-salaried, they can also go for pension scheme. But whenever you will find this word new pension scheme, Atal Pension Yojana, or employer contribution or employee contribution, then it is 80 CCD. And we know one more point, that the total limit under these three sections is 1,50,000 rupees. No, I will rectify myself. The total limit of 80C, 80CCC, and 80CCD has other sections also. 80CCD has other sections also, which I would be discussing. 80CCD1, 80CCD1B, and 80CCD2. So 80CCD is divided into three parts: CCD1, CCD1B, and 80CCD2. So don't worry, I'll be discussing this, and I believe that you must be knowing this also. Now, these three, 80C, 80CCC, and 80CCD1, the maximum limit is rupees 1.5 lakh in total. Maximum limit is 150 in total. 80C, CCC, CCD1. CCD1B is not in this 1.5 lakh. It has its own limit. 80CCD2 has its own limit. And out of this, see, in optional regime, all these sections are available. In optional regime, all these sections are available to the assessee. But in default, only this section is available. Out of these, whatever you are seeing on your screen, out of this, only this is available under default. So whether it is available under optional also, see, optional has no problem. Optional, though, everything is available. Optional, everything is available, but this is available under default. This is not available in default. This is not available. This is not available. This is not available under default. Only this. First of all, tell me, have you made this? Very good. Okay. Let's come to the question once again. He paid 35,000 premium on life insurance policy. Sum assured is 2 lakh. So we understand 10% should be there. deposited 98,000 in Sukanya Samriddhi scheme, again ATC. Sukanya is ATC. 24,000 in LIC pension fund. See, it is LIC pension fund. So it is 80 triple C. This is of any insurance company, correct? Pension fund. It's not pension scheme, it's pension fund. He paid college fees of 1 lakh for his son who is studying in Dubai. Okay. Tell me, when I say tuition fees in ATC, what is tuition fees? It's not that coaching which you go after the school. It is actually for the school fees. Tuition fees, we all know that it is the school fees or the college fees for a full-time education. Please tell me where we get this deduction of tuition fees, under which section? 80C. Everybody okay with this? For tuition fees, we get the deduction under 80C. Correct. Correct, Shagna. Very nice. Shagna is saying that, sir, we get 80C if the education is happening only in India. If it is with any Indian institution or Indian school or Indian college, then only we can give deduction. And here, if you will look at it, this tuition fees is being paid for his son who is studying in Dubai. So in this case, we will not get this deduction. Everybody okay with this? So if the children, 80C is maximum available for two children, for maximum two children, maximum 1.5 lakh is the limit. What does tuition fees means? Tuition fees means school fees or college fees, institution fees for a full-time education. So it is available only if the education is in India. If it is outside India, we will not get. Everybody is okay with it. So in this case of Dubai, we will not get it. ATC. Now, he and his employer, he and his employer contributes 8,000 per month each in the new pension scheme. New pension scheme also he and his employer is contributing. So we understand we have 80 CCD 1, 80 CCD also. Third point, he paid 60,000 for medical expenditure for his father. I will explain this in 80D. Okay, this is all related to 80D, health insurance, etc. Mr. John also furnishes a certificate from the medical authority as he is partially blind. Oh, now this person is also partially blind and he furnishes a certificate. So I tell you that there is a deduction of 80U. But tell me now, we have taken 10% for the life insurance policy. Should we take it 10% or should we take it 15% now? Now we understood that this assessee is partially blind. So now it will be increased to 15%. So how much we will take? 2 lakh into 15%. So 2 lakh into 15% is 30,000. So 35 still we can't take, but 30,000 we can take. Everybody is okay with it? Okay. Now let us start the question. So there are only few points which we have not understood. Otherwise, most of the things we now know. Tell me under which head this person is getting income. So whenever I ask that under which head this person is getting income, instead of saying that under which head he is having income, just see in which head he is not having an income. Because we have 5 heads. I always say use elimination method. We have 5 heads. First is salary. He has the income from salary. Second is house property. I don't think that we have house property income. Third is PGBP. They were saying that there is PGBP. Capital gain we don't have. IFOS we don't have. So we have only 2 types of income. That is PGBP and salary. Everybody start with me. Solution number 1. Computation of total income and tax liability of John. Assessment year 25-26. And we know that he is following optional regime. Now, he is following optional regime. Now, he has income from salary. So we have only 2 heads. And in fact, in PGBP, directly they have given the income direct of PGBP. For salary, we need to compute. So instead of making a working note, we can compute it right. Okay. Everybody. Whenever we have to compute the income under salary, first of all, forget what is taxable, what is not. Just make a list of all the things which we are getting from our employer. Just make a list what we are getting from the employer. We are getting basic salary, we understood. We are getting DNS allowance also. We read it. Everybody, keep on writing it. So we are getting basic salary. We are getting DNS allowance. Okay. Are we getting any other thing? John has a salary income, basic salary, this basic salary, he's getting 50,000 per month. DA 20% of the basic. How much is forming retirement benefits? I don't want right now. He also has a small retail trading business and PGBP. Guys, anything else we are getting from employer? Anything else we are getting from employer? Say yes or no. Say yes or no. So if we read this, these three, we are not getting anything from the employer. Very good, Shagna and Siddharth. He paid this. This is the expenses, etc. First point was all related to expenses. Second is he and his employer is contributing 8,000 per month each. It means that the employee also and the employer also, he means John and his employer contributes 8,000 per month each in new pension scheme. So whatever is the contribution by employer, see, employee contribution is not an income. Employee contribution is from his salary only, that we deduct certain amount and we deposit in pension scheme. But employer contribution to pension scheme is our income. So the third is employer contribution to pension scheme is your income. So these are the three things. So after that, if we will see, he paid medical expenditure, etc., financial certificate, no, nothing. So these are the three things which he is getting from his employer. So basic salary is 8,000, sorry, 50,000 per month. So nothing is given, so we'll take the salary for the entire year. 50,000 into 12 is 6 lakh. DA is 20% of basic. Whatever is forming part right now, we don't want. So it is 1,20,000. And how much employer is contributing? Employer and employee both are contributing 8,000 per month each. So employer is also contributing 8,000 per month into 12. 96,000. So it is 8,16,000. Correct, Shagna. 8,16,000. This is the gross salary. Everybody has done till here. I have a question from all of you. My question is, basic salary is taxable, DA is taxable. If this would have been, my question is, if employer contribution instead of pension scheme, I would write recognized provident fund, what would have been your answer? Is it still 96,000 or you will change it? If this would have been recognized provident fund, if this would have been RPF, because that is also important. Aditya is saying that we will change it. Shagna is also saying change. If this would have been recognized provident fund, very good, Gomti. if this would have been recognized provident fund, so how much the employer is contributing, 96,000, minus straight away, we would have given an exemption over here up to 12% of salary, up till 12% of salary. So we will not make 96,000 entirely taxable over here. We will make, we will give a deduction up to 12% of salary. Salary there means basic salary, DA forming part plus fixed percentage commission on turnover. Generally, you will get basic salary plus DA forming part. So just calculate 12% of it. And let's say if this is 96,000 and you calculated 12% of it, 12% of basic salary plus DA forming part plus fixed percentage commission on turnover. Let's say you calculate it as 90,000. So only 6,000 would have been your income, right? But in pension scheme, please make it entirely. First, we will make it entirely. So, sir, in RPF, we are getting an exemption. In pension scheme, we are not getting. No. In pension scheme, you will be getting in chapter 6A. In pension scheme, you will be getting in chapter 6A 80 CCD 2. Correct? Same way, guys. Same like this. So, pension scheme, first of all, employer contribution, make it fully taxable. Same concept goes for Agniveer Corpus Fund also. Employer contribution to Agniveer Corpus Fund, first make it fully taxable. Then we have a deduction in chapter 6, right? Then we have a deduction in chapter 6A. Pension scheme, make it fully taxable. Agniveer Corpus Fund, make it fully taxable. Only for RPF, please give a deduction right here. Everybody understood this or not? Correct. Very good. Correct. So please remember what it is. Pension scheme Agniveer, please make it fully taxable. RPFC, you will get only, I am telling you in your examination, you will get either RPF or pension scheme, right? So for pension scheme, please first make it fully taxable. For RPF, give the deduction right up. Okay, this is the gross salary. And from gross salary, at least we will give the standard deduction. How much? 75 or 50? Default regime 75, normal regime 50. Correct, Shagna? 50. So the salary income comes to 7,66,000. This is our salary income. And I believe we have PGBP directly. They have given to us PGBP. PGBP was 7 lakh. They have directly given to us. So our GTI, we don't have any other income. So gross total income is 14 lakh 66,000. 1466. Now less. Deductions under chapter 6A. Guys, I would recommend if you can learn generally, because I say that no need to learn the section number, but mostly in two chapters, I actually say that if it is good if you know the section number also a little bit. One is chapter 6A. You should know that which section number which you are applying. Second is TDS. You should know the section number a little. Not, I'm not saying that 100% you should remember, but try to remember these section numbers. Chapter 6A, TDS, and in capital gain section 54 series. Whether you are giving exemption of 54, 54B, 54EC, 54, which I have actually discussed, I think yesterday we have discussed. So 54, 54B, 54EC, 54F, 54D, you should know that under which section we are giving it. So generally in these three things, chapter 6A, TDS, and this 54 series, I would recommend if you know the section number, it would be good. In case if you don't know it, it's okay. Not that bad, right? Okay. Sorry. So he paid 35,000 premium on life insurance policy. So this is 80C he will get. Deposited 98,000 in Sukanya Samriddhi scheme, he will get 80C. 80 triple C is life LIC pension fund. And then college fees 80C, but he will not get because it is in Dubai. So how I'll write it? Section 80C. One is life insurance premium, rupees 35,000. It was rupees 35,000, but we will give maximum 15% of 2 lakh. So I'll write in inner column 30,000. Then he is paying amount in Sukanya. Just write Sukanya in examination. How much he's paying? 98,000. LIC pension fund, that will go in 80 triple C. It will not in 80C. Tuition fees, since it is outside India, will not take it. So 80C, we are getting 1,28,000. Everybody is okay with this? Correct, Shagna, 128. So it is 1,28,000 we are getting in 80C. Everybody with me now? Good. Now, he has also paid 80 triple C 24,000. 80 triple C 24,000 he has paid for life insurance, LIC pension fund. He will get 80 triple C. This is life insurance pension fund, 24,000. Correct, 24,000. And we know 80C, 80 triple C, 80 CCD1. Although I have not yet done 80 CCD1, we know the maximum amount can not go beyond 150. So if we look at the total, I think it is going 152. Everybody okay with this? It is going 152. So we will not go beyond 150. So we will not go beyond 150. So here I'll write maximum deduction rupees 150. So here we will get 1,50,000. Everybody understood? We'll get 150 reduction because it is going beyond 150. Even I, even I have not taken 80 CCD1, but still before that only it is going beyond 150. So I'll restrict myself in to 150. Now can you tell me in 80 CCD1 we will be able to take any reduction or not? Because we have taken in this, we have taken in this, and here 150 has been exhausted. So in 80 CCD1, whether we will be able to take any reduction or not? Yes or no? In this question, 80 CCD1, whether we will be able to take any reduction? The answer is no. Correct. Why? Because already my 150 has been exhausted over here. So I am not left with anything in 80 CCD1. Okay. Now let us discuss 80 CCD also. Okay. Everybody, please let us discuss 80 CCD1. One is 80 CCD1. Leave 2 3 lines. Leave 3 lines. Leave 2 lines. Sorry. Yes, this is, sorry, this is actually 1B. 80 CCD1. 80 ccd 1b and 80 ccd 2. I have written 80 ccd 2. It is available only under default regime. In op- in default regime, we will not get these two. In default regime, we can get only this. In optional, we can get everything. So in optional, we have no issues. Now, CCD1 and 1B, the both which I have denoted in green, they both are, please write it. These are the assessee's contribution. Assessee contribution to new pension scheme. These are assessee's contribution to new pension scheme. By assessee, I also mean employee contribution. This is employee contribution. Whereas this one is employer contribution. Please make it neatly. 80 ccd1, I've left some 3 lines. 80 ccd1b, some 2 or 3 lines. Then 80 ccd2. 80 ccd2 is for employer contribution. CCD1 and 1B is for assessee's contribution, whatever the assessee is contributing. Now, first of all, you have to understand that how much these both are contributing. So in this question, they both are contributing 8,000 per month each, and it is for the complete year. So I can say here, he is also contributing John 8,000 into 12, 96,000 rupees. So here 8,000 into 12, 96,000 rupees. And here employer is also contributing 8,000 into 12, 96,000 rupees. So here we are actually doing this to take this deduction 96,000 rupees. And here we are doing this to take this deduction of 96,000 rupees. Everybody is okay till here? Have you written this till here? Now, 80 ccd2. First, I am coming to the last one. Let me discuss with the first one, this one. So 80 ccd2 is, this is employer contribution. How much deduction we will get? First, A, actual employer contribution. Actual employer contribution, which is 96,000. Keep on writing with me, which is 96,000. And second is, second limit is 10% of salary. 10% of salary. In case you are following default regime, then it is 14% of salary. Because this is available under default also and optional also. So if you are following optional regime, then take 10%. If you are following default regime, then take 14% of salary. Correct? One more thing which is not that important. For government employee, always 14%. Whatever regime you are following. Whatever regime you are following for government employee, it is always 14%. I can say under both the regimes. Are you all okay with this? Everybody got it? So what is I'm not discussing right now about assessee's contribution, employee contribution. I'm discussing only with regard related to employer contribution. So employer contribution is 96,000. B point is now you have to apply which particular percentage, 10% or 14%, depends on the regime which you are following. So if you are following default, please apply 14%. If you are following optional, please apply 10%. But if the assessee is a government employee, always take 14%. Don't take 10% then. Always take 14%. And here salary means basic salary plus DA forming part. Basic salary plus DA forming part. So in this case, 60% of the DA forming part. So here the basic salary was 6 lakh and DA 60%. So DA 60% is 1,20,000 into 60% is 72,000. So your salary is basic salary 6 lakh plus DA forming part 72,000, forming part 6 lakh 72,000. Everybody, please tell me till here, are you okay with it or not? Have you understood the till here? Very good. Shagna, Satish, Aditya. Very good. Yes, Joseph. Good. Now, guys, please tell me which one should I take? So he is not a government employee. It's not written anywhere that he is a government employee. Okay. Now tell me how much percentage I have to take in B point. 10% if we are following optional regime, 14% if we are following default regime. So default regime we are not following. He is not a government employee. Very nice. 10%. So 10% of this amount. 10% of this amount. 67,200. 67,200. So whichever is lower, you have to take A or B, whichever is lower. So you will get a deduction of 67,200 under 80 CCD2. This is 80 CCD2. I believe everybody understood 80 CCD2. Now, let's come to this portion. Employee contribution or assessee's contribution. How much assessee is contributing? First of all, make sure how much assessee is contributing. You should know the amount. So assessee is contributing 8,000 per month into 12. This is John contribution, right? It was his employer contribution. Now this is John's contribution, 96,000. Guys, whenever you will be applying this, first of all, apply this. So first of all, we have taken this, then come to this, and at last come to 80 CCD1. At last come to 80 CCD1. You will never make a mistake. Now, let's come to this. What is 80 CCD1B? This is also a part of employee contribution. So here, first of all, CCD1B, A, assessee's contribution, assessee's contribution. So in this case, employee contribution. How much assessee is the contributing? 96,000. Or B, there is a fixed limit, and I believe you must be knowing it. There is a fixed limit of 50,000 in 80 CCD1B. You have to remember this limit. In CCD1B, there is a fixed limit of 50,000. And guys, CCD1B is not in 150 limit. 150 limit is only CCD1, not CCD1B or CCD2. So it has its own limit, 50,000 rupees. So out of A and B, take whichever is lower. So you will get 50,000 deduction here. You will get 50,000 deduction here. Have you understood CCD1B also? See, 1B is very easy. CCD1 will come at last. CCD1 we should come at last. 1B, whatever the assessee is contributing, and fixed limit 50,000. So whichever is lower is 50,000. 50,000 we will get it. Everybody is okay. Now let us move to the last one, CCD1. See, tell me out of 96,000, already how much deduction we have received. See, these both are assessee's contribution. Tell me out of 96,000, are you all okay with it? If I'll say that out of 96,000, we have got 50,000 deduction already. Because what are these two? These are employee contribution, assessee's contribution. And out of these two, because the assessee is contributing 96,000, he is depositing 96,000, we will give him deduction. But out of it, 50,000 we have given him deduction in CCD 1B. Everybody is okay that out of 96,000, 50,000 he has got it. So how much is left now? How much is left now? 46. Everybody is okay with 46,000? Correct, Shagna. Correct, Aditya. 46,000. Because see, if the assessee is depositing 96,000 there, so maximum deduction he can get 996 only. 50,000 he is already getting. So CCD1 we are left with 46,000. So 80 CCD1 A, assessee's contribution, or I can say assessee's contribution which is remaining. So it is 46,000. So now assessee would be saying, sir, actually 50,000 you have given me here. Thank you. My 46,000 is remaining. Can you give me in 80 CCD1? Now can you give me in 80 CCD1? So he's asking this. First limit is assessee's contribution, whatever is remaining. What is remaining over here? Whatever you have taken in 1B, just exclude that. Now tell me whatever is remaining. B point. B point. Guys, 46,000, I believe nobody has doubt. Satish, Gomti, Joseph. 46,000, I believe, Pradeepa. Nobody has doubt. If you have doubt, you can ask me. Good. It's very simple now. Because assessee has contributed 96,000. 50,000 we have already given. 46,000 remaining he is asking. Okay. Guys, here, if you look at this, here the maximum deduction is 150. Can I write an equation? 80C plus 80 triple C plus 80 CCD1 cannot go more than 150. Are you all okay with this? 80C, 80 triple C, 80 CCD1 cannot go more than 150. Correct? Today I need 80 CCD1. I need 80 CCD1. So can I also write this equation like this? That 80 CCD1 is equal to, simple, I'm just taking these two there. 1,50,000 minus 80C minus 80 triple C. Guys, are you all okay with this particular thing also? You can write it also. And I believe that you all are okay with this also. Because CCD1, what is CCD1? Out of 150, if we have already taken in 80C, 80 triple C, then now we can take in 80 CCD1, whatever is remaining out of 150. Correct? So 80C, 80 triple C, 80 CCD1 cannot go more than 150. And CCD1, I'm keeping this equation right here. 150 minus this, minus this. It will go right inside, so it will become negative. So what I can do is, with this equation, have you written this, guys? So with this equation, I know that my Come back over here. I know that my now B point is 80 because I'm doing 80 CCD1, which should not be more than 150, excluding 80C and 80 triple C. Are you all okay with this? And in 80C and 80 triple C, how much deduction we have already taken in this question? 80 triple C 128, 80 triple 80C 128, 80 triple C 24, and already 150 we have already exhausted. 150 we have already exhausted. So 150 minus these two in this question, because we have already exhausted. So I'm coming with zero. Why? Because 150 is already getting exhausted. So I believe that you understood this also. Correct? And the third one is 10% of salary. 10% of salary. So is it 14% of salary in default? No. See, in default, you will never get this section. You will never get this section. In default, it is only this. So it is 10% of salary. For government employee also, it is 10% here. CCD1, it is always 10%. So 10% of the salary we have already computed. 6,72,000 was the salary. 10% is 67,200. So 10% is 67,200. Now, whichever is lower, 46,000, 0, 67,200, whichever is lower, 0. So this is the total deduction under 80. Correct, Shavina? 0. So this is the total deduction under 80 CCD. CCD 10, CCD 1B 50, and CCD 2 67,200. Everybody's okay with it? So this is the total deduction. So you can add them up. This is the total deduction. Okay. Should I change it? Done or not? Okay. Okay. Good. Now, first point done, second point done. Third point. He paid 60,000 for medical expenditure for his father who is 75 years of age, and there is no health insurance policy of the father. He also paid 7,500 for preventive health checkup for his wife. 50% of his pay paid in cash and rest by Bhim UPI. He furnishes a certificate from the medical authority and he is partially blind. Uh, so you should always start from CCD to those of, I would say yes. Even you have the option, see CCD 1 and 1B and CCD 2. Either you start with this part or you will start with this part. No problem. If you are starting with this part, it's okay. If you are starting with this part, this is also okay. But I would prefer, if you are starting with this part, always start with CCD 1B first. Correct? So anyways, because this is something isolated, CCD2 is something isolated because it is for employer contribution. You can do it after this also. Correct? So you can start with this. You can start with this part also. But when you are starting with this part here, always start with CCD1B first. Then come to CCD1. Got it? Okay. Guys, leave some space because we have still not done with the question. So there are few more deduction. 80D is there, 80U is there. So leave some 5 lines. I think you can leave now. And then please write. Or you need to compute the text liability also now. Then you can leave some 8, 9 lines. So I'm writing it from the next page. Section 80D. Please write about 80D, a very important section. 80D. 80D is for health insurance. We call it Mediclaim insurance also. It is not life insurance. No, it's not life insurance. It is health insurance. 80D, obviously only under optional regime we can get it. So how much deduction we can get in an optional regime? So for this, we actually distribute in two categories. We take the first category belongs to the assessee himself or herself, spouse, and only dependent children. Only dependent children. See, in 80C, dependent as well as non-dependent both were covered. But in 80D, only dependent children are covered. This is one category. The second category is parents. Whether they are dependent, they are non-dependent, they both are covered. Whether they are dependent, they are non-dependent, they both are covered. In 80C, parents were not covered. In fact, if they are dependent also, they were not covered. But in 80D, parents are covered, dependent as well as non-dependent. Here, if we pay health insurance premium, if we pay health insurance premium, then we will get a deduction of rupees 25,000 in this category and 25,000 in this category. So total deduction, I can say that 25,000 here, 25,000 here, 50,000 rupees. We can get it. But if the person for whom we are paying health insurance, this person is a resident senior citizen. See, whenever a senior citizen benefit is given in the entire income tax act, it is to resident only. Non-resident senior citizen, we never give any extra benefit. So extra benefit is given wherever it is for senior citizen. By default, it is resident only. So if this person is a resident senior citizen who for whom we have taken the insurance, then this limit will be increased to double 50,000. Here also 50,000. So if the assessee's father is a senior citizen, resident of course, so this limit will go to 50,000 rupees. If any one of them, so let's say assessee's father or mother is senior citizen, 50,000, but assessee or spouse is not a senior citizen, 25,000 here. 25,000 here in this category, 50,000 in this category. Maximum 75,000 can go over here, right? Some important points, important notes. First, such health insurance premium not in cash. If you want to pay it, please pay it through banking mode, not in cash. Not even 10,000, no. Not even 5, 6, 7, 8,000, no. Everything should be paid through banking mode only. It should not be paid in cash. So if your question is saying that this health insurance is paid in cash, so please don't allow it. 80D will not be applicable. However, preventive health checkup. However, preventive health checkup is allowed. However, preventive health checkup is allowed. How much is the maximum limit? Maximum rupees 5,000 in cash also. So preventive health checkup is whenever we are getting our health checkup. So the limit is 5,000 and it can be paid in cash also. So preventive health checkup has its internal limit of 5,000. And guys, this 5,000 is the overall limit. It is not like this for this category 5,000, this category 5,000. No. If for preventive health checkup, you have already claimed 5,000 here, you cannot get it here. Correct? And this 5,000 is not beyond this limit also. This is the maximum limit. This is an internal limit in itself. In 25,000 or 50,000, this is an internal limit. So it's not like that if the limit is 25 plus extra 5,000 we will get. No, you will not get extra. So it is within that limit only. Within that limit only. And second thing, it can be paid in cash, right? If it is more than 5,000, we will not get it. Maximum 5,000. And this 5,000 is the overall limit. What is overall limit means? For example, we have paid 4,000 for self or spouse, 3,000 for parents. So if we have taken 4,000 here, now we are left only with 1,000, because total it cannot go more than 5,000. That I'll be explaining with example. Third point. Third point is, if the person is resident senior citizen and does not have and does not have health policy, then medical treatment expenses are equivalent to premium, are equivalent to premium. What does it mean? It means, let's say there is a person who is a resident senior citizen. Guys, generally, those people who are very old, insurance companies deny that we will not give you health insurance premium. Why? Because insurance company also thinks that this person is very old. It is very, very high chances that he would be hospitalized, and we have to pay such a high hospital bills. So instead of that, insurance companies denies that we will not be able to give you the health insurance policy. So in that case, if the person does not have a health insurance policy, so he will not be able to claim the benefit of ATD. Agree? So in this case, it has been extended. This benefit is given to those people also who does not have a health insurance policy. But if they are expending on medical treatment, so it is assumed as if you are spending on health insurance premium. So you will get ATD also. So medical treatment expenses are equivalent to premium. It will be assumed that whatever the medical expenses you have paid, it is a health insurance premium only. Got it? Have you written this? Fourth very important note, lump sum premium. Lump sum premium means more than 1 year, more than 1 year premium. See, there are generally, if you will ask me, more than 90% of the policies are, these policies are just for 1 year. It is not life insurance. Only life insurance is for a very long time. Other insurance are just for 1 year. See, other insurance means all other insurance. Let's say your car, your bike, your scooty. Every year you have to get the insurance. Yes or no? Every year you have to get the insurance, because the insurance validity is just 1 year. So second year again you have to get the insurance of your car, of your vehicle. Same is like for other insurances also, except life insurance. Life insurance is a long term insurance. Once you do it, just keep on paying premium. You don't have to get it insured again and again. But for other insurance, you have to get it insured generally every year. So health insurance is also such a policy which we have to get it insured every year. Sometimes there are now certain health insurance companies who are giving you a benefit that you can get the insurance for 2 years, 3 years, 4 years also. So let's say now your client has paid insurance of, let's say, 2 years, 3 years. So will he get the deduction right here in this year? No. So what he has to do is he can take deductions in all these years. So this is called lump sum premium. So if the person has paid lump sum premium for more than 1 year, so deduction would be deduction per year would be we will divide that total lump sum. We will divide that total lump sum into the years. So total premium paid divided by number of relevant years. Total premium paid divided by number of relevant years. So now what does it mean by number of relevant years? Example, Mr. A paid Mr. A paid rupees 72,000 on 1st July 24 for health insurance for 3 years. He has paid 72,000 rupees as health insurance and he has taken a policy for 3 years. It's a lump sum payment for more than 1 year. So in this case, your deduction will be, or I can say your per year premium will be total premium paid 72,000 divided by number of relevant years. Now students will make a mistake over here. So they often make a mistake. What they do is they divide it by 3. Why? Because we have taken this health insurance for 3 years. So the mistake they make it, they divide by 3. So it says 72,000 divided by 3, 24,000 is the per year premium. Maximum 25,000 is allowed for, let's say for myself, so 24,000 is allowed. Correct. So this is the mistake which most of the students that does. Now what you need to do is, in case of lump sum premium, you have to see number of relevant years, not just number of years. I have written number of relevant years. What does number of relevant years means? Guys, if I ask you that he has paid on 1st July 24 for 3 years, tell me the date up till when this policy is in effect now. Tell me the last date this policy is valid from which date till which date, guys? If it is for 3 years and he has paid it on 1st July, so can you tell me the last date of this policy? Everybody try to give me the last date of this policy. When this 3 years will be over? So it would be from July 24 till 30th June 27. Correct. 30th June 27. So I'm writing June 27. I can write 30th June also. So this is July 24 till June 27. Okay. July 24. Here's first, okay, 1st July 24 and 30th June 27. 1st July 24 falls in which year? 1st July 24 falls in which year? Previous year, 24-25. Agree? And guys, 30th June 27. 30th June 27 falls in which year? You will say previous year. Which one? Previous year, tell me. 30th June 27 falls in which previous year? Previous year 27-28. Correct, Aditya. Previous year 27-28. Now, this policy is touching starting from this previous year to this previous year. Obviously, middle previous year are also there. So previous year 25-26, previous year 26-27, and then 27-28. So actually, these are the relevant number of previous years. which is 4, which is 4. So you have to divide it by not 3 but 4. So this is quite tricky. Most of the students divide it by 3. They say that this is for 3 years policy. But the thing is that you have to divide it by the number of relevant previous year, that how many previous year are falling, how many previous year are getting affected. Divide by 4. So it would be 18,000 rupees per month for the year, not 24,000 rupees. So here 80D would be, let's say it is for self spouse. So 18,000 or 25,000, whichever is lower, 18,000. So here 80D in previous year, 24-25, we will get 18,000. Have you all understood this or not? Everybody, have you all understood this or not? Very good. Very good. Now, let us come back to the question. He paid 60,000 for medical expenditure for his father, who is 75 years of age, and there is no health insurance policy for father. Guys, please tell me whether 80D can be allowed for his father or not, who is 75 years of age, and there is no health insurance policy for his father. Whether 80D can be allowed or not? The answer is, although he is not paying health insurance, but his father is a resident senior citizen, and if nothing is given, he will take it as resident senior citizen. So he has paid medical treatment for 60,000. So it is, Kishore is saying allowed. Kishore is saying okay. Tell me how much would be the amount allowed then? Can you tell me how much would be the amount allowed then? Very good, 50,000. Because for the second category, that is for parents, we have maximum 50,000 rupees. Okay. Next is, he also paid 7,500 for the preventive health checkup for his wife. For his wife, he has paid 7,500. 50% is paid in cash and rest in Bhim UPI. See, for preventive health checkup, we don't have any issues like cash or non-cash. For preventive health checkup, we can pay it in cash also. That is not an issue. Can you tell me how much is allowed? How much is allowed for his wife? Maximum 5,000. And I told you that 5,000 is the overall limit. So we are not paying for parents, we are paying for only for self or spouse. So here it is spouse. So 5,000 we will get. 50% paid in cash, 50% in Bhim UPI, doesn't matter over here. Preventive health checkup is allowed. So 5,000 we will get over here and 50,000 we will get over here. Total it will be 55,000. Everybody understood 55,000 ATD? To come back to your question, and ATD, section ATD for health insurance for preventive health checkup, it is 7,500. It is 7,500, but we will get maximum rupees 5,000. So it would be 5,000. Second is for uh, medical treatment of, it is medical treatment of father, rupees 60,000, but again maximum rupees 50. So we'll get 50,000 over here. So 55,000 in ATD. Agree? Now, now, last one. Mr. John also furnishes a certificate from the medical authority that he is partially blind. Guys, there are two sections, 80 double D, disabled dependent, and 80U. Both are disability. 80 double D if there is any person who is dependent on the assessee. Let's say assessee spouse, children, parents, or brother and sister. If the assessee family member, again I'm repeating, spouse, children, brother, sister, or parents, then they will get a flat deduction of 75,000. In case of severe disability, there is a flat deduction of 125, right? I believe that you remember. Same deduction in 80U if the assessee himself or herself is disabled. So if the assessee would like to claim this for himself or herself for disability, including blindness, deaf, or dumb, then 75,000. In case of severe disability, 125. Correct? So here, the assessee himself is disabled, and it is written that he is partially blind. Partially blind is not severely disabled. So whenever they will say severely disabled, they will actually write it severely disabled. Or any person who is a severely disabled means his disabled his disability is 80% or more. 80% is the severe disability. You will not get this. You will get this word severe disabled. So there you can take 125, but here we will take 75,000. So 80U, section 80U deduction is disability, and there is a flat deduction of 75,000 here. Everybody agree? So these are the deduction which we can claim. And just for 10 seconds, see your PGBP income is, sorry, your GTI was 14 lakh 66,000. Your GTI was 14 lakh 66,000. Just for 10 seconds, just ask yourself whether it has any special income, whether it has any long-term capital gain, triple 1A, 112A, casual income. The answer was no. It was just salary and PGBP. So there is no problem as such. This is a normal income and we can give up till this amount of deduction. So how much is the deduction? 150, 50, 67, 200, 1,50,000 plus 50,000 plus 67, 200 plus 55 plus 75. So 3,97,200 is the total deduction. And our total income would be 1466. 10 lakh 68,000. 10 lakh 68,000. I think we can calculate the tax liability as per optional regime. So that is not a big problem. Everybody has done it or not? So tax liability, we can do it later. Tax liability is not a problem. Now, now, let us come to question number 2. Suresh is employed with armed forces under Agnipath scheme and receives salary of 39,000 per month. So he is employed with armed forces. 39,000 per month is the income. He and the central government contributes 30% of the salary to the Agniveer Corpus Fund. So he is also contributing. The central government is also contributing. So we understand whatever the employer here is central government because he is a Agniveer defense employee. 1068 800. Yeah, correct, Kishore. Okay. It's 200 now. 1068 800. Correct, correct, correct. Okay. Let's come to question number 2. It says Suresh is employed with armed forces under Agnipath scheme and receives salary of 39,000 per month. he and the central government contributes 30% of the salary to Agniveer Corpus Fund. So here, see, he's contributing, that is not an income, but the employer is contributing. You all know that that is an income. And I believe that you remember I told you that whenever the employer is contributing to pension scheme or Agniveer Corpus Fund, please make it your entire income. He retired on 31st of January 2025. So he retired on 31st January 25. So it means that February and March salary he will not get. So we will compute everything for 10 months. Understood now? And receives 11.5 lakh from the fund. He took a loan for higher education. He took a loan for higher education, MBA, on 1st February for 6 lakh at 9% per annum for study in Australia and started paying EMI from February 25 onwards. He contributed 25,000 to Prime Minister Drought Relief Fund and 65,000 to Patanjali Vidyapeeth, approved charitable organization. So this is the contribution he has made, donations he has made. He has also paid 15,000 to Delhi University for scientific research project. Compute his total income if he opts out from the default tax regime. Okay. Okay. So in this question, he is having only income from salary. That is from, he's an Agniveer, he's getting income from salary, but till 31st January 2025, because after that he has got retired. Okay. Then all the things which he has given to us, it is his either investment or donations. So it is not an income. So the only income which we are getting is salary income. First of all, let us start this question. Solution number two. Computation of total income. So and so assessment year 25-26, and he's following optional regime. He's following optional regime. Now we have to compute his total income. So the only income which he is getting is salary. So whatever he is receiving will make the list of it. So he is receiving basic salary. He is receiving not any other thing except employer contribution to Agniveer Fund. You all know that employer contribution is our income, right? Employee contribution is not our income, but employer contribution is our income. So employer contribution to Agniveer Fund. So his salary was 39,000 per month. And since he retired on 31st January, so I will not take for the February and March. So this is 3,90,000. And his employer is contributing how much? 30% of the salary. 30% of 3,90,000. 1,17,000. Total it is 5,07,000 less obviously standard deduction. And since he is following optional regime, 50,000, 4,57,000, 4,57,000 is his salary income. And since there is no other income, so his GTI will also be 4,57,000. Everybody has done till here. All of you have done till here. Correct. Very good. Now, leave some space or from the next page. Section 80 CC H. Very good. Joseph, Satish, Aditya. Good. So this is ATCCH. This is related to Agniveer scheme. And I believe you must be aware of Agniveer scheme. So this is a scheme of the central government that those people, those young generation who would like to join the armed forces, so for a few years they will be employed in armed forces. After that, they will be retired, and after that, they would be receiving some money from the Agniveer Corpus Fund that is completely exempt. Whatever the money which you receive, that is completely exempt. And every year, when you are getting this money, whenever you are employed, you can take the deduction of 80 CCH also. What is 80 CCH? 80 CCH is divided again into two parts: 80 CCH1, 80 CCH2, 80 CCH1, 80 CCH2. 80 CCH1 is the employee contribution, and 80 CCH2 is the employer contribution. And there is no limit to it. Whatever the, see, these are soldiers, so there is no limit to it. So CCH1, whatever the employee is contributing, you will get the deduction. 80 CCH2, whatever the employer is contributing, you will get the deduction. There is no such limit. It's a very plain, simple section. The only thing which you should remember is 80C in optional regime. If you are following optional regime, then you can take both. But if you are following default regime, you cannot take this, but you can take this. So in optional regime, you can take both of them. But in default regime, you can take only 80 CCH2. So till now, we have done that 80 CCD2 employer contribution to pension scheme, 80 CCH2 employer contribution to Agniveer scheme is available only under default. And guys, note, amount received on maturity, amount received on maturity from Agniveer fund is fully exempt. I believe that you have written this also. Now, see, come back to this question. Since this person is an Agniveer, so and he is following optional regime, so he will get both the deductions CCH1 and CCH2 less section 80 CCH1. He will get whatever is the employee contribution, and he will get 80 CCH2 also, whatever is the employer contribution. And each is, everyone is contributing 30%. It was given in the question now that he and the central government contributes 30% of the Agniveer Corpus Fund. So he is also contributing 30% is 1,17,000. So he is also contributing 117. His employer is also contributing 117 each. So he will get this deduction: 1,17,000 80 CCH1, 1,17,000 80 CCH2. Correct? All okay? Now, let us read the remaining question. He retired on 31st January 25. Okay, we have taken 10 months and receives 11.5 lakh from the fund. Guys, he received 11.5 lakh from the fund. Completely exempt. Completely exempt. Now, he took a loan for higher education, MBA, on 1st February 2026 for rupees 6 lakh and 9% per annum to study in Australia. and started paying EMI from February 25 onwards. He contributed. Okay. So till here, it is an education loan. So you understand, for education loan, we have deduction under section 80E. Again, only in optional, it's not in default. So education loan, if you have taken a loan for education for yourself, for spouse, for children, or for any student for whom you are legally liable. So if you have taken an education loan, please remember education loan interest is allowed. So whatever the interest which is paid, it is allowed. So this loan we have taken it for study in Australia. So can we go and study outside also in 80E? Yes. Please remember in 80E, outside education is also allowed. Outside education is also allowed. In 80C, it was not. But in 80E, outside education is also allowed. Only the interest portion. Only the interest portion. You will get this deduction. So 80E, we will get how much? 6 lakh rupees we have taken a loan, 9% per annum. And this we have taken a loan on 1st February. 1st February 25. So it means, guys, we have we would have paid the loan for only 2 months, February 25 and March 25. So 6 lakh into 9%, 2 months out of 12 months. So tell me the amount, 6 lakh into 9%. Is it 9,000 rupees? 9,000 is the deduction which we will get. Correct, 9,000. Correct, correct. Good. Thank you. So 80E, you will get 9,000 rupees. Only the interest portion, guys, only the interest portion. Can you tell me the principal repayment we have paid? If the question would have been given that we have paid also 40,000 rupees as the principal repayment, where you will get the deduction? Anybody? For this loan, 40,000 if you have made for the principal repayment, where we will get this deduction? Any idea? Principal repayment. Any idea? Guys, is it somewhere written in 80C? Do you remember if anything is written in 80C for principal repayment? In 80C, do you remember there is one more thing actually in 80C? Principal repayment. Very good, Shagna. In 80C, we have the principal repayment, but that is only for the housing loan. In 80C, whatever is the principal we have repaid, we get it for housing loan only for the purpose of purchase of the house or construction of the house. Again, I am repeating. In 80C, the limit is 150 overall, right? The limit is 150, and there are so many types of deductions which we can take in 80C. One of them is principal repayment of housing loan. And that too, housing loan should be only for purchase and construction. It is not for repairs, renovation, or reconstruction also. No, not for renovation, not for reconstruction, not for any other thing. It is only for purchase and construction. I'll be telling you this in the total income question also, right? So here, if the education loan is getting repaid, so we don't get any reduction anywhere. 80C is only one where we get principal repayment, but that is very, very specific to housing loan, that too only and only for purchase and construction. That's it. So if your examiner will try to confuse you that we have paid a principal repayment of the education loan, so please don't give any deduction for the principal repayment, only for the interest portion. Got it? Now, now he contributed 25,000 to Prime Minister Drought Relief Fund and 65,000 to Patanjali Vidyapeeth, approved charitable institution. Guys, can you tell me any, if you remember the section number of this, where you get the deduction of the donation which you make? Anybody remember the section number? Correct. 80G. Correct. Shagna, Aditya. Correct? 80G. Please write it over here where you were writing some concepts. 80G. Section 80G. Guys, 80G is for donations. 80G is for donations. Here you can get this deduction. Obviously, it is only optional regime. Please write it. Obviously, it is only under option. See, in default regime, we have only three: 80 CCD2, CCH2, double J, double A. That's it. Now, in 80G, you get for donations. And if you are making donation, now look at it that where we are making this donation, where we are making these donations. This is first, there are some certain funds, mainly government funds. Here it is mainly government funds. Mostly you will find the word national written over here. National Children Fund, National Sports Fund, Prime Minister Fund, National Relief Fund. You will find the word national only, PM Cares Fund, etc. So here, these are mainly government funds, mainly these are national funds. If you want, you can read that. You don't have to learn that, but you can read that list. You will find National Sports Fund, National Children Fund, National Fund for Blood Transfusion Council, PM Cares Fund, Prime Minister National Relief Fund. National you will find in most of the cases. And if you want, you can today after the class, you can read that list also in ATG. So National Fund, if you are donating here, you will get 100%. The deduction is 100% of contribution. 100% of contribution. That means 100% of donation. Whatever you contribute over here, you will get 100% deduction. Second is, second area where you can donate it, there is only one. There is only one, which is called Prime Minister Drought Relief Fund. Prime Minister Drought Relief Fund. Only this one fund. So it's only one fund, so you can easily remember. Here the deduction is 50% of the amount donated, 50% of contribution, 50% of amount donated. So if you will donate here, you will get 100%. If you donate here, you get 50%. Got it? So here it's very easy, Prime Minister Drought Relief Fund. Third, here you will donate to any approved institution, any approved institution, very, very specific, very, very specific. Third, if you are giving to any approved institution who are engaged in family planning, who are engaged in promotion of family planning. Guys, here actually you are giving a donation to approved institution who is engaged in the promotion of family planning. Here is also one, there is one more, but that is not relevant because that is only for the company assessee, they can get it. One is Indian, although I'm writing it, Indian Olympic Association. But this deduction is only and only for company assessee, only to company assessee. So this is not important for your examination because generally you will get for individual, right? You will not 100% you will not get for company assessee. Guys, I have written Indian Olympic Association, right? National Sports Fund in first one. National Sports Fund is in first category. Here it is Indian Olympic Association. So if you find that your assessee is donating here, mainly here, approved institution for engagement of family planning, here in third one you are giving the donation, you will get 100% of amount donated. 100% of the amount donated, or 100% of qualifying limit, whichever is lower. 100% of the amount donated. Especially, guys, please remember, you are donating to any institution who are engaged in promotion of family planning. So here you will get 100% of the amount donated or 100% of the qualifying limit. See, if you remember, in first one, I have only mentioned 100% of the contribution. There is no such limit. But here there is a limit also. What is qualifying limit? I'll explain you. So you will get this. So there in first and second, there is no limit. It is straight away 100%. It is straight away 50%. But in third and fourth, there is a limit also. And fourth, if you are donating to any other approved institution or NGO, provided they are approved, any other approved institution or NGO, or to some notified religious place. Religious place means temple, mosque, church, or gurudwara. So if you are donating to any notified religious place for their renovation, for their renovation, then you will come in the fourth category. Your donation will come in fourth category. So in fourth category, it is A, 50% of amount donated, or B, 50% of remaining qualifying limit. Remaining qualifying limit. First of all, tell me, have you made this? Then I'll explain more. So guys, in first and second, there is no such reference of limit. But in third and fourth, there is a qualifying limit also. Here it is 100%, here it also it is 100%, here it is 50%, here it is 50%. Guys, let's say, for example, don't write it. Let's say I'll tell you that how you will get your qualifying limit. That is not a problem. Let's say, for example, your qualifying limit comes to, for example, 2,50,000 rupees. Your qualifying limit comes to 2,50,000 rupees, for example. Correct. What is qualifying limit? It's just a one minute job. I'll tell you. Don't worry about it. So let's say qualifying limit comes to 2,50,000 rupees. And now, let's say a person has donated in to any approved institution which are engaged in family planning. Third category, he has donated 2 lakh rupees over there. 2 lakh rupees over there. He has donated 2 lakh. So how much deduction we'll get in third category? We will get 100% of the amount donated. 100% of 2 lakh is 2 lakh. 2 lakh. Or 100% of the qualifying limit. 100% of the qualifying limit, whichever is lower. So the qualifying limit, randomly I have taken 250. So 100% of the qualifying limit is 2.5 lakh, whichever is lower. So how much you will get? 2 lakh over here. Everybody is okay with this 2 lakh? So let's say randomly I have taken my qualifying limit as 250. And let's say here in third one, we have donated 2 lakh. So we will get 2 lakh deduction over here. Correct? In third one. Guys, tell me now, my qualifying limit is 250. Guys, this is subject to qualifying limit, third and fourth. So my qualifying limit is 250 lakh, let's say randomly. And if I have already exhausted somewhere in third, so how much is my remaining qualifying limit? So my qualifying limit was, let's say randomly 250. And we have already exhausted 2 lakh rupees over here. So our remaining qualifying limit is left with 50,000 only. Have you understood? Remaining qualifying limit is 50,000 and 50% of this remaining qualifying limit is 25,000. Have you got this idea? What is remaining qualifying limit? So whatever is your qualifying limit is, whatever is exhausted in third, just see what is your remaining qualifying limit. And for remaining qualifying limit, you have to do 50%. and whichever is lower, you will get the deduction. Whichever is lower, you will get the deduction. Now, just write what is qualifying limit. Now write what is a qualifying limit. Qualifying limit is equal to 10% of adjusted GTI. Qualifying limit is equal to 10% of adjusted GTI. Whatever is my adjusted GTI, we will take 10% of it. That is called a qualifying limit. Now, what is the adjusted GTI means? Adjusted GTI is equal to, you have to adjust your GTI, right? The name itself is saying adjusted GTI. So you have to adjust your GTI. You have to subtract something from your GTI. So GTI minus 111A minus 112A minus 112. That is short-term capital gain on equity shares, long-term capital gain on equity shares, and other long, right? Not casual income, not casual income. 111A, 112A, 112. So from your GTI, deduct all these capital gains minus all deductions from 80C to 80U except 80G. 80G is what we are calculating, right? So GTI minus 111A minus 112A minus 112, not minus casual income, no, not minus casual income, and all deductions from 80C to 80U except 80G. So if you will subtract this from GTI, you will get adjusted GTI. Whatever is adjusted GTI into 10%, that is called qualifying limit. Have you written this also? Now we understood. Now we understood that because of this qualifying limit, we have to deduct all these deductions from 80C to 80U except 80G. So it is better to do your 80G, to compute your 80G at last. Correct? Joseph is here? Yes. Joseph, you have to compute 80G at last. Why? Because to compute the qualifying limit, you have to deduct all your 80C to 80U first. And then 80G can be, the qualifying limit can be obtained. So please keep 80G for last. Okay. I believe that you have written it. Guys, there is one more section, although not very important. You all know scientific research. Whenever you donate for scientific research, so people who have PGBP income, they get this donation whenever they donate to scientific research. That is called outside research, right? It's not in-house. We are not doing it in our business. We are giving this money as a donation to some research institution. Let's say we are giving it to IIT, we are giving to National Laboratory, we are giving to any other approved colleges. This is called outside research. This is not in-house. It's a donation. It is known as outside research. And if it is, we are having a PGBP income and we have given it for outside research, so we get this deduction under section 35 of PGBP. It is regarded as, although it is not 100% a business expense, but still it is regarded as a business expense. So we get this reduction in section 35, outside research. But let's say there is a person who does not have a PGBP, no PGBP, who does not have a PGBP. Can he also donate to IIT? Can he also donate to National Laboratory, any other institution? Why not? He can also donate. But now, can he claim under section 35? The answer is no, because 35 section is for PGBP. So those who do not have PGBP, they get deduction under section 80GGA. They get deduction under section 80GGA, right? 100% of the amount donated. 100%, sorry, 100% of amount donated. You will get this deduction. And yes, both these deductions, see, this is outside research, right? Outside research was also in optional regime. It was not in default. Only in default, in-house research is allowed, not outside. And same, 80 GGA is also for optional. So anyways, these two will not be in default. They both would be in optional, but you should remember that whenever we are donating for outside scientific research, if we have PGBP section 35, if we don't have PGBP, 80 GGA. Understood? Okay. Now, let us come to this question. Again, he contributed, read from here, he contributed 25,000 to Prime Minister Drought Relief Fund. Prime Minister Drought Relief Fund. Can you tell me in which category? 1, 2, 3, or 4? You've written it somewhere. 1, 2, 3, or 4? In which category he has donated? Everyone? 2. Correct. It was Prime Minister Drought Relief Fund 2. How much deduction you will get in 2? 50%, right? 50% of this amount. And 65,000 to Patanjali Vidyapeeth approved charitable institution. Okay. Is Patanjali Vidyapeeth is in which category? 1, 2, 3, or 4? Other things are in 4, right? All other charitable institutions, etc., they are in 4th category, right? If they are approved, they are in 4th category. Everybody okay with it? See, in the first category, we have only some national funds. Prime Minister Drought Relief Fund, you all know. Third is for promotion of family planning, if we have given the donation to approved institution. And this is in 4th category, any other approved institution, any other approved institutions or NGO, it is 4th category. Got it? So here RSSE is donating here and RSSE is donating here also. See, if our question is like it, if in our examination we are getting any question where your donation are going in only first and second, then please be very happy because you don't have to calculate the qualifying limit. So if your donation are only in 1 and 2, we don't have to calculate the qualifying limit. The qualifying limit requirement is only in 3rd and 4th. Understood? Since we require qualifying limit and qualifying limit is calculated after all deductions from 80C to 80U except 80G, so we have to give other donations also first. So I will keep 80G at last. So 80G in this question, 80G I will keep it for last, and then I'll read if there is any other deduction or not. First I should do that. He also paid 15,000 to Delhi University for scientific research project. Guys, he has paid for scientific research project. What do you think? Will he get the deduction or not? What do you think, which section for scientific research project? Is he having PGBP income? No. Section 35? No. So it is 80 GGA. Correct? So 80 GGA, he will be getting it because he is following optional regime and he does not have a PGBP income. So let us give this deduction first. 80 GGA and how much he has contributed? 15,000 rupees. Section 80 GGA. Section 80 GGA. So he is getting 100% of amount donated. So he has donated 15,000 for scientific research. 15,000 deduction he will get it. Everybody is okay with this? Correct? Now, next is the last deduction is 80G. The last deduction is 80G. And in 80G, he is donating to Prime Minister Drought Relief Fund 25,000. So 50% of Prime Minister Drought Relief Fund, 50% of 25,000, 12,500. Second is he is also donating to Patanjali Vidyapeeth. That is another institution, other approved institution. How much he has donated? 65,000. So rupees 65,000 he has donated there. Now how much he will get? He will get A or B, whichever is lower. A is 50% of donation. That is 32,500. 50% of this, 32,500. Or 50% of remaining qualifying limit. Now, guys, in this question, I will not write remaining. Why? Because, see, what is remaining qualifying limit? Let's say my qualifying limit is, I have given you the example 2.5 lakh. So, whatever I have exhausted in third, after that, what it has is remaining. So, if we have already exhausted 2 lakh rupees over here, so remaining is 50,000. But in this case, in this question, actually, I have no category 3 deduction. In category 3, we have not made any deduction. So whatever is the qualifying limit, how much we have exhausted it over here? Zero. So it means the entire remaining qualifying limit is qualifying limit only. Understood? Because I have not exhausted anything over here. Because in this question, there is no such donation to third category. So I will write it over here. 50% of qualifying limit. Now, what is a qualifying limit? What is a qualifying limit? 10% of adjusted GTI. Qualifying limit is equal to 10% of adjusted GTI. 10% of adjusted GTI. What is adjusted GTI? Adjusted GTI is my GTI, 4,57,000 minus. If we have 111A short-term capital gain on equity shares, 112A long-term capital gain on equity shares, or 112, that is other long-term. Although in this question, we don't have any of them. Why? Because everything is coming from salary. So 111A, 112A, 112 we don't have. Okay. All deductions from 80C to 80U except 80G. So 80C to 80U. So 117, 117, 9,000 and 15,000. These are all the deduction. Just subtract that. So 117, 117 is 2,34,000 minus 9,000 in 80E minus 15,000 there in 80. Tell me, how much is my adjusted GTI? See, adjusted GTI, GTI minus 111A, 112A, 112 we don't have. All deductions from 80C to 80U except 80G. So it is 4,57,000 minus 234 minus 9 minus 15. So it is 1,99,000 qualifying limit into 10%. Into 10%. So qualifying limit is actually 19,900. Correct? 19,900. Now, what is this saying? 50% of donation or 50% of the remaining qualifying limit. Remaining why? Because whatever is exhausted in category 3, but category 3 we have not taken. So 50% of this 9950. Whichever is lower, so we'll get 9950 donation over here. Tell me what is my income now? Now, please remember, can you give all these deductions from this income? Yes. See, I've told you now in GTI, just wait for 10 seconds and see whether it has my any special income. So it does not have any special income. So you can freely give the deduction over here. So if you'll subtract it, see 199 we are already getting. So I believe you will get 1,89,950. This is my total. Everybody's okay with it. X would be, of course, would be zero because it is less than the basic exemption limit. Everybody understood this? 12,500 I left. I left 12,500. Correct, correct, correct. Correct. This I have left. Correct, Shagna. This is 174, 177, 450. This one. Okay. So these two sections we have done most of the deductions. Actually, two more deductions which I would like to cover. Okay, I would like to cover QQB and double J double A and TTA TTB also. Let me discuss those deductions, then I'll give you the homework. See, first is, please write it, section 80 QQB. This is royalty on books. This is royalty on books. And it is available only to resident individual. It is available only to resident individual. Amount of deduction. Amount of deduction is equal to A, your royalty received minus expenses. Royalty received minus expenses. That I can say royalty income. That is royalty income. Or B, rupees 3 lakh, whichever is lower. Or rupees 3 lakh, whichever is lower. This is the deduction in 80 QQB. One or two points which you should remember is when you take this royalty received here while giving deduction, this is amount of deduction, please write it under section 80 QQB. When you received, when you will take this in QQB while giving the deduction, the royalty received should be not more than, not more than 15% of value of books. 15%. Just remember, here royalty received should not be more than 15% of the value of the books. Example. Example. Let's say Mr. X is an author. Mr. X is an author royalty received, this text is an author, and let's say royalty received is rupees 3 lakh, and which is 20% of the value of the books. And his expenses were 30,000. His expenses were 30,000, right? And you are computing his income. And let's say we are computing his income. Calculate total income. We have to calculate the total income, for example. So first of all, solution. See, royalty received is either you can take it PGBP also. Let's say this person is a seasoned author. He writes, keep on writing book. His main profession is that he is an author. So you can take it as PGBP also. Or you can even take it IFOS income also. That doesn't matter. You can either take it PGBP or take it IFOS. So first of all, it's your IFOS income or PGBP income. And because you understand in both of these PGBP and IFOS, expenses are allowed. Expenses are allowed, so there is no problem. So what you can do is solution. Here, your IFOS income would be, first of all, see, right now you're not concerned with 15%. 15% you are concerned at the time of giving the deduction. Right now, your IFOS income would be entire royalty which you received minus expenses 30,000. So your IFOS income would be 270. Here, I think that there should be no doubt. Your IFOS income would be 270. Then now let's chapter 6 say deduction and apply section 80 QQB. Apply 80 QQB. What is 80 QQB now? A, your royalty received minus expenses. B, rupees 3 lakh is the fixed limit, whichever is lower. Now this royalty received, when you will be giving this QQB, when you are giving this QQB, you should not take more than 15%. See, if this would have been 15%, 14%, 13%, I would have taken this amount. But if it is more than 15%, maximum I have to take maximum 15%. So can you tell me 3 lakh is equal to 20%? So how much is equal to 15%? 3 lakh divided by 20 into 15, 225. I believe everybody is able to compute 225. Correct, Shagna? 225. So this 3 lakh is equal to 20%. So how much is equal to 15%? So you will get 2 lakh 25,000 minus expenses 30,000. 195. Correct. So 195 or 3 lakh, whichever is lower, 195. You will get this deduction. So total income would be 75,000. Total income would be 75,000. Understood? Now, I believe everybody has done this. There is one more last section which I would like to discuss with you. Introduction. Important from examination point of view is section 80 double J double A. 80 double J double A. It is available in both regimes. It is available in both regimes. This is for new employees, new workmen. It is for new workmen. But the condition for this is, first of all, it is eligible to only those assessee who are liable to get their accounts audited. So in other words, I can say whose turnover of the last year is more than 1 crore. Those only people are eligible assessee. So eligible assessee is eligible assessee is that you are liable for audit. In other words, turnover of previous year more than 1 crore. If your turnover is more than 1 crore, then only you are eligible to get this deduction of 80 JJAA, which you can get in both the regimes. Now, now, what are the main conditions? If you employ new workmen whose monthly salary is up to rupees 25,000 per month, his monthly salary should be up till 25,000 per month only. It should not be more than 25, not more. So if you are paying more to them, so this deduction would not be available in respect to such employees. So only those employees whose monthly salary is up till 25,000 per month or less than 25,000, those are only allowed. Next point, they are your regular employees. They are your regular employees who are who are contributing in provident fund. So how we will, they should not be your dummy employees. They should be your regular employees. So how we will identify whether they are not your dummy employees? So you must have opened their PF account. So it is important that they must be your regular employees. Now, not casual. They should not be casual. Fourth, minimum working days should be 240 days. If they have worked for less than 240 days, then you will not give the deduction this year. So minimum working days should be 240. In case it is a leather business, leather, footwear, or apparel business, it is 150 days. It is 150 days. For leather, footwear, apparel means clothing. These are quite seasonal businesses. So here we will not take 250. Here we will take 150 also. It would be good enough. Correct? How much is the amount of deduction? You get it for 3 years, but you are not concerned with 3 years in your examination. In your examination, you are concerned with amount of deduction, would be 30% of such wages. Whatever the wages you are giving it to them, 30% of such wages. Correct? I believe that you have written this. Okay. I'm taking the example of, I'm not reading the entire question number 3, but I'm taking some few points over there to explain you that how much is 80 JJAA over there. See, this is question number 3. We're not doing the complete one. Mrs. Jyoti runs a manufacturing concern and has PGBP income is 15 lakh during the previous year 24-25. Her PGBP income is 15 lakh. Her turnover during the year is 12 crore. So we understood that her turnover is more than 1 crore. She is liable for audit. So it means that she is eligible for 80 JJAA. Correct? Then she employed 40 new workmen during the previous year 24-25. She employed 40 people. 16 employees receive a salary of 26,000 per month and remaining receive 18,000 per month. Guys, out of 40 employees, She is has recruited 16 employees. 16 employees are getting salary of 26,000 per month. Will not give deduction to them, right? There is no deduction in respect to them. Why? Because their salary is more than 25,000. And the remaining employees, so out of 40, 16 were getting 26,000. So now we have 24 employees remaining. So these 24 employees are getting a salary of 18,000 per month. Correct? So these are eligible. Now let us see that in this year, how much wages we have given to them. Whatever wages we have given to them, 30% will take it. So they all were employed from 1st July 2024. Okay, they all were employed from 1st July 2024. It means that if they were employed from 1st July 2024, it means that we have not given them salary in April, May, June. It is from July onwards, that is 9 months. So here, what we will get in this question, so 30% of such wages. So there are 24 employees. Every month we are giving them 18,000 rupees. Everybody agree? So every month, how much we are paying them wages? To one employee, 18,000, 24 employees, 24 into 18,000. And for how many months we have paid? 9 months. Not for the entire year, but 9 months. First of all, tell me, are they eligible? Yes, 9 months is equal to how many days? Yes, 9 months is equal to almost 9 into 30. If I'll take around 270 days, right? You have to take this parameter also. So they were employed for around 270 odd days. So yes, it is more than 240. It is more than 240. So they are allowed. So this is the wages we are giving to them. And the deduction would be 80 double G double A would be 30% of this amount. So 24 into 18,000 into 9 into 30%. So this is 11,66,400. 11,66,400. This is the deduction we will get in 80 double J double. This deduction is available under both the regimes. So please keep this in mind. Maximum, it should be 25,000, not more than 25,000. They must be regular employees who are employed for at least 240 days in a year. So yes, they were employed for 9 months. It is around 270 days. Yes, they are satisfying. So whatever the salary we are giving to them or wages we are giving to them, 30% of that amount will get in 80 double J double. Understood? So this was important deduction. So most of the deductions we have discussed, ATC we have discussed, AT triple C, CCD, CCH. Then ATD we have discussed, ATE we have discussed, double J double A, QQB. These all are important deductions, right? Guys, please remember, in clubbing there are two or three things which you should remember in clubbing of income. First of all, the income of a minor child. This is important. This is very important because in examination mostly you find the income of a minor child. See, minor child income is clubbed in the hands of parent. Whose parent? Father or mother? Guys, minor child income is not clubbed in the hands of grandparents. No, only in the case of father or mother. So minor child income would be clubbed either in the hands of father or in the hands of mother whose income is higher. Whosoever income is higher, we will club it, right? So before such clubbing, we will see that father is earning more or mother is earning more. So whose income is higher will club in that particular parent hand, right? So it is only the first time we will see. First time, let's say this year is the first year when minor child is having income. So let's say this year mother income was higher. So we will add in the hands of mother. Next year, again, when we'll be adding it, now we will not see who is earning higher income. Then in that case, always in the first year, wherever we have added, we will add in that year only. Correct? So father or mother, whichever is income is higher. Second thing, the income of physically handicapped, physically handicapped child, and if the child has earned income by way of his knowledge, skill, or manual work, then it will not club. It will not be clubbed. It will not be clubbed. This thing you should know. Otherwise, all other income would be clubbed. Otherwise, all income would be clubbed. And in optional regime, please don't forget to give exemption of up to 1500 per child. It's not per month, it's a total annual exemption, 1500 per child. But in default regime, no exemption in default. In default, there is no such exemption. The entire income of minor child, please add it. But in optional regime, whenever you are adding the minor child income, there is a exemption of 1500 per child. Number of children, no issues. Number of children, no issues. For every child, it would be this deduction. So first, you should know about the minor child. Second, in clubbing, you should know remuneration of a spouse. Remuneration of spouse. So if spouse is getting remuneration without skill, experience, or qualification, if the remuneration is getting, if the spouse is getting any remuneration without skill, experience, or qualification from concern where individual has substantial interest. So where that individual is having a substantial interest. Substantial interest means that, let's say, husband is a partner in a firm where he's a partner of 20% or more. What is substantial interest? 20% or more. And from that concern, the spouse is getting a remuneration without any skill, experience, or qualification. So it will be clubbed. It will be clubbed in the hands of individual. Right? These are the two important points. I'm not saying that there are other points. There are some other points also, but these are two important points which you should remember in clubbing, because these are mostly frequently repeated. Right? Otherwise, clubbing is an easy chapter. I believe most of the students already know that how you will do it. Is, if I'll say that what is the most easiest chapter in the income tax, so you will all say it is clubbing of income is the most easiest chapter. So I believe most of you must be knowing it about clubbing. So for your homework, see 10 double A, question number 4 is 10 double A, but I will be discussing 10 double A with your total income. Question number 5 and question number 7 is your homework. And if you can also repeat question number 2, although we have done it, but if you can repeat it, question number 2 or 3, it would be good enough. But at least 5 or 7 is your home. If you get time, you can do question number 2 and 3 also, but 5 or 7 is your home. Right? So we'll keep it till here today. Tomorrow we'll be starting with set of TDS and TCS. Right? So see you tomorrow at 7:30 a.m. Right? Complete your homework, send it to me. Thank you so much, guys. Bye and take care.